Hello, everyone, and a very warm welcome to today's cryptocurrencies update for Friday, March the 8th, 2024. Is time ticking out for the cryptos? Are we going to see a larger pullback in the order of 30 to 40% before we move higher? Are we in the last push before we see that pullback? I still see that pullback either from a little bit higher or from about current levels as a buying opportunity, because if history is any analogy, we could see from there another 100% gain. This is the original time frame we were looking at, that we were in the mid-bull based on the previous phases of Bitcoin, going all the way back to 2011. And it seems like we're in a more accelerated mid-bull phase. Normally in the mid-bull phase, we're not making yet new all-time highs as early as now. As you can see here, in March of 2020, we saw first a dip, and we didn't start making new all-time highs until we came into the late bull. The same here with the mid-bull, finally new all-time highs in the late bull. Same here, this was the mid-bull where we currently are in, and we didn't make new all-time highs until the late bull. And now we're already making new all-time highs very early in the mid-bull. So this cycle might be compressed for whatever reason. The why is not important. Is it because of sentiment? Is it because of the halving? Is it because of the ETFs? I don't know. I don't have an answer for you. All I know is that this was originally what we were going for, and this was originally the bullish plan. And we've been bullish for half a year now, I think, something like that. And once we started applying this one, we were looking for a 1-2 setup, and that unfortunately didn't materialize, but longer term, we remained bullish. That is pretty much what we're looking for. And this was the upside target by late 2025. Now, again, we might get a compressed cycle, right? It's a repeat, but it never rhymes, or it rhymes, it never repeats, whatever it is, one of the two, right? Gunning for at least 100,000, right? That was what we were looking for, 103 to 211,000. We're not there yet, okay? We're just at about almost 70,000. I don't have my Elliott Wave chart on here, do I? Or is it hidden in here? No, I don't, but the original projection was for around 106,000. I still think we can get there. We never said we're going to go for certain to lower levels unless we break, of course, below the 2022 lows, or if we break below the 2023 lows. And that has never happened. So we remain, of course, bullish on the cryptos. So let's have a look here at the charts and see what we have. So this is the wave count of a extended orange wave 5, of gray wave 5, of green wave 3 to about 78,000 for Bitcoin. And with today's break above this week's high, it certainly looks to be the way. So we can keep on ratcheting up or higher our warning levels. The first warning level is, of course, now today's low. The second warning is yesterday's low. The third warning is Wednesday's low. And then the final warning is Tuesday's low. Very simple. If we go below Tuesday's low, which is at around 59,000, I think we can visit somewhere around 52 to 46,000, somewhere around there. If we keep on moving higher, we hold above today's low, we can target 78,000. And more negative divergence will creep in. This is akin to what we saw here in early 2021. And I shared that with you earlier this week. Allow me to zoom in so you kind of can see again what we were looking for. So we're zooming into 2021. And what in particular we are looking for is this here. Okay, this particular down day there. Okay, and we're now in this one. So this was this one single down day, which was around, I believe, 15-something%. There you go, 18% down day. Now, what did we get on Wednesday, or Tuesday, sorry. On Tuesday, we got a similar kind of down day. A little faster, almost 15%. So it seems to be of the same magnitude. And then we rallied for 1, 2, 3, 4 more days. Okay, we're now in currently day 3. Doesn't have to be exact same. Okay, so for example, this drop was just hours, whereas here it took 2 days. And here we have then 4 days of rally, and we might have a longer rally, which is fine. but it starts to suggest this is the case by breaking higher. And then we saw here, of course, the 31.5% decline. It got us back to the lows here at around 58,000. So yes, it's very possible. You can see here the 38.2% retrace of this entire wave 3, if we go to 78,000, is at 57,800. So very close to this wave 4 low, analog to here. And from there, as you can see, Bitcoin in 2021 rallied over 100%. Okay, now if we get the analog here, let's say we bottom out at about 57,000, at 100%, we're already at 114,000, which already meets our long-term goal. Okay, now of course, the best opportunity to buy is here if you have missed everything, right? The best opportunity is to wait for a oversold pullback. Here you're really chasing. If you chase, make sure you place the stops appropriately. Okay, because there's of course no guarantee that this will be a wave 4. It can only be wave 3, right? So we have to be honest and place a question mark wave 4 here. And then we place a question mark wave 5 because we don't know. We can't predict the future. We're only going to assume standard Fibonacci-based patterns till they don't work anymore, right? There. The alternative is that we're in this B wave. This B wave means we have already completed wave 5 of 5 of 5 of 5 of 3. And this is a irregular flat wave 4, A, B, C. So that's why we have our warning levels, right? Below today's low is warning level 1, that we're going to about 50,000, okay? And so we apply the exact same warning levels. Right there, right? It's exact same warning levels. Now, from a bearish perspective, of course, we are going to say, well, if we're going to close above today's high, and then if we're going to close above about 72,000, that's another warning. And then this is then, let's put it here. If we close above the all-time high so far, right? It's made there. And the second one, if we close here. The third one is if we're going to go above 72,000. Why? Because that is the 123.6% extension of wave A, potential wave A. And that's quite typical for a B wave. I don't want to see it any higher. And if we really break above it, then all bets are off. So we're going to put these warning levels here for the bears, right? These are the bearish, because this is a bearish wave count. So these are the bears warning levels. If you're now going to bet on this C wave. If the C wave is going to go lower, we should see about 52 to 49,000, somewhere around there, okay? That would retrace this entire rally. It's quite normal. This is now, of course, clearly support, right? This part is support. So that matches really nice as well. So this is, of course, support. So over the weekend, we'll probably see a decision, one of the two. And then this should be 4, question mark. We don't know. We think it is, but we don't know. And then 5. Okay? Because we still are in a bullish cycle. We haven't broken below anything warning at all. I mean, the first serious warning long-term is to break below the January. Okay? So those are the two options we're looking for. The preferred option, I would admit, is for higher prices because we continue to make higher highs and higher lows. And that pattern needs to break. Even on Tuesday, we did not make a lower close compared to Monday, right? Still for the week, we're up. We can still raise our stops. My crypto trading alert service is still long Bitcoin, and it keeps on raising the stops. We're still long a last 25% of the original position, I believe, that was started here in late January. Of course, we blocked all of this. Maybe we have to go back further in time. I don't know, but the stop loss is now somewhere here. My trading system has placed a stop loss here for the last 25%. I think we went long here or all the way down here. One of the two, I don't know, but it is up tremendously, 22, 25%. Let me actually have a quick look here. I can find it for you. And here we go. There. Okay. So this is Bitcoin. I was stopped out here. Are we long again? I think we're long again. Anyway, that's why, yes, we're long again. And this looks good. 24.5% on the short term, 23.30% on the short term. Intermediate term, 22, 20%, 26, 29%. Long term, 100%, 68%. So these are all big fat winners, right? So in January, February, and now into March, if every position was $10,000 for a full position, you made now $800, I believe, or 2 losing trades happens, massive winner. And the same here, you would have turned Ethereum just $10,000 into $12,000. This is of course a lot more intermediate term, and it's even more long term. Big time frames, big gains. Small time frames, smaller gains. That's just the way the world works. You cannot expect big gains from short term. It's impossible. Why? Because things don't move as much in the short term compared to the long term. So this here you would have now had already 20,000 something. This would be 16, 17,000. This would have been turned into probably 12,000, 14,000. So plenty of money only on $10,000, right? Only. That's it. Easy peasy lemon squeezy. So again, if you have problems trading, also for those who listen, my crypto trading alert service is available on my website. Is the way to go. Very hard to lose in strong uptrends. All right, brings me to Ethereum. This was our original wave count on Ethereum, and the sucker keeps on moving higher. So this is then incorrect. All right, we had the 1, 2, 1, 2, 1, 2, 3, 4, 3, 4, 3, 4, subdividing wave 5. All look nice and dandy. Then on Tuesday, this looked really completed, and no, we moved higher. So then it means we have counted something incorrect. What was then incorrect? Instead of this a orange 3 and an orange 4, it was only a 1 of the orange 3. All right, we get a massively subdividing blue wave 5. Okay, so we had 1, 2, 1, 2, 1, 2, 3, 4, 3, 4, still the same, but this was not orange 3, it's only teal blue 1, teal blue 2, red Roman numeral 1, red Roman numeral 2, 3, 4, 3, 4, 3, 4 matches, big, and now in this wave 5. So the warning levels are, of course, now today's low, yesterday's low, Tuesday's low, and Wednesday's low. So every single lower low increases the odds that we are already in this green wave 4. Okay, that's what we are looking for, potential green wave 4. And it's very hard to know exactly where this is going to top. So once we see a lower low below the previous day low, then we know, okay, we're going to look for lower prices. But for now, it's still higher. And I think this wave count of a very extended orange wave 5, extremely subdivided. I wish I knew that beforehand. All the way up to Tuesday, this counted really nice. It counted really nice, but the market decided to prove me wrong. I'm sorry about that, but those are things you just cannot foresee beforehand. Technically, the market had done enough by Tuesday to consider this old green wave 3 complete, okay? And the market just decided, no, it is not enough. Once we bottom out for this wave 4, similarly, I expect a 100% plus rally for Ethereum as well. It's not out of the ordinary because from October into current price levels, we already have a 150% rally almost. ETHE, same deal, right? That's the ETF that tracks Ethereum. We start to see some negative divergence. It's just a condition. It's not a trigger. As you can see here, from November into January, it takes a long time for it to kick in, right? See that? So it's going to take a long time. Sometimes it doesn't, sometimes it does. Again, we're in the topping zone for wave 5, 5, 5, 3. Just watch the lows. If we drop below today's low, warning 1. Thursday's low, warning 2. Wednesday's low, 3. And of course, below this big, fat, massive down day is all bets are off. We're in black wave 4. So those are the warning levels to watch. GBTC, same deal. Let's see, I have 2 wave counts for GBTC, similar kind of as to Bitcoin. We are topping out here for wave 5 and 5, 3, right here at today's high. We need to see below today's low to confirm that. And then the next low, which is a lower low, is of course Wednesday's low, and then the final arbiter is and will remain Tuesday's low. If we break below it from current levels, then I think we can revisit around $50 plus or minus 5. Most likely somewhere around this level, 45 to 40. That seems to be the most reasonable. Let me adjust it a little bit for you. Most reasonable wave 4 target zone. Okay, somewhere around there. 4, and then of course wave 5. That if we assume Bitcoin is going to rally 100%, GBTC will probably do the same and will propel it to about $80 to $90. Not too bad, not too shabby. So we're simply biding our time for this gray wave 5 to complete. The alternative is shown here in that we will see some sort of another 3-4 kind of setup. I don't really like that this wave 5 of 3 here fell short of the ideal wave 3 target zone. So we're going to apply the same there, and that we are still here in this topping region. So we're going to get wave 3 here. We're going to get a wave 4 and then a wave 5. Again, we're just going to raise our warning levels, right? Today's low, Wednesday's low, and then I'm going to do the third warning level here at this level here, it's around 56 point. What is it, 5-ish, somewhere around there, which is this cluster of prices here. And then, of course, the ultimate is Tuesday's low. Below Tuesday's low, and we are already in this wave 4. Okay, that's what we're going to look for. So then we would see a 3, something like this, and then another rally, and then of course the larger plunge like that, and then of course like that, right? That is for this wave count the preferred path, but also this wave count is still looking higher. And again, I have 0 signs of the top being in place because we have not closed any lower prices that we made on Tuesday. So we look higher. How we're doing Solana? Solana, we were tracking 2 wave counts. Remember the A, B, C here for this more protracted wave 4 versus at some point the ending diagonal because we made a new uptrend high last week. Okay, we went above this one. That was the wave count, and this still looks really good for a ending diagonal wave 5 of 3, I would say. So there is then wave 5. Ending diagonals are all ABCs. Okay. Why? I don't know. It's just sentiment driven. So here we have A, B, C, where C is A, pretty perfect for wave 1, wave 2 here. And then wave 3 normally targets the 123.6 to 138.2% extension of wave 1 measured from wave 2. And we've reached it so far to the T. We've also here a nice CSA relationship. Wave A, Tuesday's low, wave B. This is wave C. And now we're probably going to drop back here to about this level here for wave 4. And then we're going to get a final push higher for this wave 5 into the 163 region plus or minus 5, somewhere around there. Okay, that's what we're going to look for. So far, so good. Looks like probably more like a expanding ending diagonal. Looks good. How we're doing on the miners, Mara looks bottomy. We've bottomed here so far in the ideal wave 2 target zone. So far, so good. Not too shabby, but doesn't tell me too much yet with today's reasonably ugly candle. Riot the same. We've bottomed so far in the ideal wave 2 target zone, right? It's anywhere between 23.6 and 76.4. We've reached exactly 76.4. If we keep on moving lower, all bets are off. Then something is amiss with the wave count I'm having. Don't like it yet that Riot is below the 200-day and Ichimoku clouds. So for me, from a personal trading point of view, it's a no touch. I touch only things that are above the 200-day and above the Ichimoku cloud, because chances of good things happening even after a pullback are much greater than when they are below those 2 key ingredients to the chart. So that's all I have for today. I hope you appreciate these insights. We are biding our time, waiting for these cryptos to top over. We might see the January analog for Bitcoin revisit Tuesday's low, probably by the end of this month. Wouldn't surprise me. Okay. If we do start to break below each subsequent previous day low, we're going to look for about 48 to 52,000 for a potential wave 4, and then 100% rally. If we rally first to 78,000, I'm going to look for about 58, 52,000 for potential wave 4, and then 100% rally. Same, of course, for Ethereum. The original wave count was really good. Nothing wrong with it. Technically, it was 100% correct. But instead, we got the subdividing wave 5 of 3. Tuesday's pullback wave 4. We make a new uptrend high is wave 5, 5 of 3 underway. Same for ETHE. Biding our time to see if we're going to start making a lower low. Tuesday looked really good, but it all got negated already on Wednesday by making a new uptrend high. So we are still in this wave 5. And then this wave got looks a little better. Look at the massive extended wave 5 in green. I remember wave 3 reached the target zone 4, and that was it. Same for Bitcoin. Can have topped, but we need to break below today's low. Otherwise, we keep extending potentially via the 3, 4, and 5. Solana, the ABC here is of course off the table. So we're going to take that away, and we're going to solely focus, Solana, solely focus on this expanding ending diagonal. In my humble opinion, it can be also a regular contracting diagonal. 1, 2, 3, 4, 5. I like it. Mara bottom so far where it should for wave 2, but no signs of a bottom in place. Need to see higher prices. Riot looks good as well, bottom right where it had to, but I want to see it move above the Ichimoku cloud before I turn to bullish. Take care, trade safe. Catch you all next week.